Welcome to the show. Hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows traders access to Forex, but also energies, metals, indices, binary options. What more could one want? So good to see you. How's it going? Up, down, turn around, 15 pips of profit? Yeah, well, it depends on when you woke up, doesn't it? Joseph says slow day. Well, it all depends. Could have been a ripper day if you were at the right place at the right moment, right? So let's look. We'll start with Aussie Dog. Kind of looks like this. We'll start there, and we'll go through the motions. And so far, right? Yep. And we'll just go from there. Anyways, let's get going. Hey, when most people decide whether they want to take on a risk, they look at performance, they look at history and other data from the past. And, well, in trading and investing, past performance is not indicative of future results. What worked yesterday, last week, last month, last year probably won't work today and tomorrow. So therefore, that's inherently risky and not appropriate for everyone. Makes sense, right? All right. So what's going on in the world? Well, you can see China devalued their currency for the third time in 3 days. Asian currency immediately dropped, in this case Aussie dollar, because remember I said there's going to be a correlation. China is going to devalue their currency, and all other exporting nations in Asia will also have their currency negatively impacted because they're competitors. Okay, so anyways, down she comes. But look what happened immediately. This bunch of shake and bake, right? But so at the moment it was announced, it was craziness. This is the China Open. The Shanghai Open is at 9:30 Eastern time. So anyways, so there's some shake and bake. Whoop, 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 whoop. Notice where support took place off of New York's low, but also off the daily central pivot point. So even with that news, straight down, straight up, and then inevitably what happened? Once we get rid of the volatility and all the emotion and the excitement, it generally still came down as it's supposed to. Doesn't mean it has to. But if you were to read a textbook, they would suggest this would come down in that scenario. Right? All right. Was it a big move? No. Is it predictable? Oh, yeah. Why is it predictable? What would have created a predictable top? Oh, the photo up there? No, that photo is probably 5 or 6 years old. In fact, I have more screens now than I did then. That's only 12 screens. What a loser. 12 screens. Loser! Loser! Yeah. So that's old. All right. So why is this predictable? Well, let's open up this horizontal line. And what's the closest cycle level? Oh, I don't know. How about 74? Oh, hey, Wayne, maybe it's the psychological level of 74. Now, remember what we talk about day after day after day after day after day after day after day. Are you a bull or are you a bear? If you're a bear, you sell at resistance. What logical areas could possibly be resistance on this currency pair? 74,000 is very reasonable for multiple reasons, but for the basic reason that it's a psychological level, right? It's an assumption. You would just assume so. So let me put that back, or let me get rid of some of these fibs. Right, so it's just a basic assumption. If you're a bear, you look to sell around 74. And guess what? If you're a bear, you'd look to sell somewhere around 75. This is just, I don't know, that's it. Doesn't mean you'll get it to fall, but you would look to. You would be ready to. You would have a plan to. You would observe the process, and you'd be ready at the gates. Okay? What is the best time of day to place a trade? Like you already know this. You know this tomorrow and next week and next month and next year. What's the best time to be ready to place a trade? The London Open. That's that. I mean, that's that. So let's take a look. When is the the best time of day to have placed trade if you didn't have a limit order at 74, which I don't blame you. But it came down, consolidated, right? Still no trade. Whoop! What do we do now? Right? Whoop! What would the trade plan be? Whoop! Whoop! And of course, inevitably, someone's going to challenge me on that and say, well, how'd you know it was going to go down? Why didn't you buy this cross up? And what's the logical answer? I'm a bear, yo. Thank you, Alex. Perfectly said. Perfectly said, Alex. Bravo. I'm a bear, yo. Hot to go, HOTTOGO. Yeah. It surely makes things easier, right? Yes, and don't call me Shirley. Yeah, now Zio brings up an interesting point. It didn't always go down in this scenario. Yeah, I know. I mean, what am I supposed to tell you about it? I don't know, dude. You're right. Those are the days you lose money, right? You're right. I mean, dude, but is there anything down here that might have propped up the value of the Aussie dollar? Somewhere around here. Is there anything on this chart that says that there might be a supportive area? Like maybe the reversal pivots? Could have, right? So all of that is nonsense now. Who cares? It's a figment of your imagination. Question is, are you going to buy this? That's it. We're at support. If you're a bull, if you're not setting up a long right now, you're either not truly a bull or you just don't know what's going on. You're just off in la la land, right? I'm a bull, but I don't want to buy at support with the Stoke cycle at the open at the New York Open. All right. All right. Right, so wouldn't a bull want to do that? Right? At least, sort of a top and a bottom kind of play, right? If you're a bull and you believe the market's trending, what is the best zone for buying? If you're a bull in an uptrend, if you were to write a textbook, how to trade Forex, what's the zone? If you're a bull in an uptrend and you want to buy, 382 to 618, which is 382, 50%, 618. So could we call that red zone about 382? The answer is yes, because the way it was calculated is I calculate yesterday's low and yesterday's high, and then I do the retracements. But the move is actually a little higher, right? So this is based on the actual move now, not just the daily range, but the move. We're on the 382 now, right? And should a bull buy a higher low after a higher high? Okay. The only issue with this is I don't believe we're trending at the moment. Okay. But if you thought it was, that's where you'd buy. Okay. And I would suggest, if you got it to work, your top would be out here. So it's a spot trade, right? Maybe you pick up 50 pips if you get it right. So what if you're a bear? Well, this would be a lousy time to sell, wouldn't it? So I think a bear might be thinking this. Okay. Don't you stink? Trade between the pivots. Really, it comes down to how many bulls there are. If the market truly buys up the Aussie dollar here, actually what would happen is the dollar would tank, the US dollar, right? But so I'll say it differently. If the US dollar tanks, this will move up to the psych level again, 74. Just depends. The US dollar needs to weaken. Okay. Yesterday's trade plan was to sell it at 74. What? Uh-huh. Uh-huh. You guys remember doing that? There's yesterday's sweet spot. I like the way you trade. Mm-hmm. Remember the discussion? Nice stuff, right? I like the way you trade. Mm-hmm. So we're still clearly in a downtrend, I think. Do you guys remember this trade? Sell it at the 382 Fibonacci retracement, which predicts a 1618 extension, which we drew before it happened. We drew that before any of that happened. We drew that sort of before we even got here. Look at that. Did it stop at the 1618? Isn't that just crazy redonkulous? I mean, I've been this a long time, and I still find that kind of stuff fascinating. So, you know, for example, if this went up to 76, based on all this, you know, uncertainty that China's creating, I wouldn't have a problem with that. It'd be great, wouldn't it? Bring it on, Bubba. Bring it on. Okay, and we would adjust our pivots, or our fibs, I mean, and oh snap, that's a 382 Fibonacci retracement. Oh my gosh. It's going to be awesome. It's going to be awesome, right? It's going to head up, boom, we're going to drop it like it's hot. Can't wait. So bulls, go ahead, you have my permission. Drive it up to 76. I'll be waiting for you. Okay. So you got to choose what's going on now. You're going to buy it or are you going to sell it? You can't sell it now. So you're going to buy it. Right? Make the decision. That's the key to success. Mostly because if you're wrong, your failure is minor. So there's that. Let's do some kitty cat. Here we are back at the key level of 130. Very, very key level. So who knows? Is it supportive? 70 cents, huh, for a Canadian dollar? Man. There was a time when everything in Canada was half price. And then there was a time when everything was expensive. Here we go. Time to visit my mom, I guess, huh? Yeah, I remember when I took my wife to meet my Canadian family. We flew up there, and I'm like, Canada's awesome because we can stay in hotels and get fabulous rooms, and you know, uh, my aunties would come up to talk with my mom, and I'm like, oh, ladies, let me get you some tea and some sandwiches, and who wants that? You just don't worry, everything's half price. Don't worry about it. And well, it used to be. That's how it was most of my life. Canadian dollar was really, really weak. So it's not an unusual place for us to be, hey? Question is enough? When is commodities prices going to go up? We need quantitative easing to take effect in Europe. That's what China needs. China needs stabilization, right? And so they're doing things to stabilize their economy. Maybe in the long run it's all good. So the bottom of oil is the 42 to 44, right? We have known that for a year. We've talked about it for a year. We sold the hell out of this thing at 60. We only had 3 months, heads up to prepare for that trade, right? So let's go over there. Being Canadian. Do we have any Canadians in the room? So there's the bottom. Any Canadians? Yup. So one of my great Canadian moments, if there's a national newspaper called the, what is it, the Post, the National Post? It's sort of like USA Today for Canada. It's the National Post. It's been around for, I don't know, probably 200 years. And they wrote an article about me. This is way before I did Forex. I was a high-tech entrepreneur in the Silicon Valley. And the National Post wrote an article about me in regards to brain drain, about all the smartest minds in Canada leaving. Again, because the Canadian economy couldn't support it. If you were smart, you left. Isn't that amazing? 10 years later, I visited my family in Canada, and they're carrying cell phones, and I'm like, holy crap! This isn't the Canada I remember. I'm like, oh my God, my Uncle Bill is eating sushi. It's unbelievable. I mean, just wow. Just amazing how much Canada changed in just, basically one generation of wealth. But Canada is generally has been poor and has always been a commodity currency. Wheat prices were low forever, and oil prices. So I have a family in the oil business that's been in the oil business for years and years and years in Alberta, just before you even heard of it. they were on the patch. Just very interesting, being an inside and then an outside observer of Canada, how much it's changed. And, and they're kind of, it must be an interesting time to be Canadian where you're reminded very quickly here how much things have changed. Nobody likes to be poor for very long. So it'd be interesting to see what happens. So they really need the ECB to get this thing together so that China can be saved, so that Canada can be saved. I mean, it's quite a devaluation of the Canadian currency, crazy. But maybe it doesn't come around. Again, the fracking of oil is so cheap to produce and so quick to produce. Why make a serious, 20-year investment into building, tar sands, facilities and stuff, when you're like, nah, we'll just invest into an American company that'll frack it. So there might not be a serious reason to invest in Canada on the short run anyways. Wheat prices are at an all-time low, right? Or not all-time low, but seriously low in copper and nickel. Right? Hamilton, Ontario, the largest producer of nickel in the world. And you can go there and they have the largest nickel in the world. It's something like 20 feet in circumference, and it's a nickel, Canadian nickel. Also, if you like gold bullion, who likes gold bullion? Canada sells a gold coin that is like, 5 pounds or something. You can buy a Canadian coin, minted. It's like 5 pounds or something ridiculous. How do you like that? Put that in your pocket and carry it around. Oh, is it Sudbury? Yeah. Oh, it was Hamilton. What was that rate, eh? So very interesting how the world can change, right? Poor countries have become rich, and then rich countries can go poor. And we're in a shift, especially with China changing things. It could affect the balance of payments and current accounts and all these different things that happen. But so anyways, let's finish this oil thing. I hope it goes up from here, because back in February, in March, the plan was to have it go up here to 62, right? 618. And once it went up to 61.8 or 62, which is a 382 Fibonacci retracement, it would head back down. And even though a 382 predicts a 1618, we talked about this very clearly, there's no way in the world I thought this was going to go down to, 22 or 14. All clearly established, months and months of analysis looked at almost on a daily basis, right? So the plan was it'll probably just simply go down to the 100% line, which is the $42. Well, we're at $42. So good time to pray, because praying never hurts, and that would be good for a lot of different economies. Stabilization in commodity prices, because it's not just the value of oil, which you would think is a good thing. Hey, cheap oil is good, right? Well, not if your factory isn't running. Who cares? But also, how many countries in the world are trying to create inflation right now? The United States, Japan, China, Australia, New Zealand, the entire Eurozone, the UK. Who cares about everybody else, right? What's left? India. Holy smokes. So that's this fall in prices of a commodity that everybody in the world uses is deflationary and not good for anybody. How'd you like to be Draghi? Right? Or how about Abe? And you've spent an unbelievable amount of money, so much money that you can't even comprehend how much it is. Like a football field full of money you've spent, and you haven't got anything to show for it. Holy smokes! Right? Holy smokes! Yeah, India's only happy now because all of this means low inflation. What happens to India 3 years from now? Brazil. Here comes inflation. Here comes inflation. Dun, 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 dun. Yeah, it's on its way, right? Don't worry, the rich people have already got it out of the country, so no big deal. So anyways, so that's that. Let's talk about China, because this is on your mind, right? All right. China is bad, right? China devalues their currency, right? Currency manipulator, bad. This is what you read, right? China, very bad, very, very bad. Okay. Mood. Oh, don't look at my trade plan. Don't look at it. That's mine, Bubba. All right, let's do this. All right. This is the USD yen. Has the value of the yen, according to this chart, since 2012, has the yen appreciated or depreciated? Okay. And was it from the normal ebb and flow of currencies? Was it just standard global macroeconomics and money flow? Well, right, Vikrant, interest rates have been near zero in Japan for 15 years. So it's not an interest rate issue. Quantitative easing. So the government of Japan manipulated their currency, didn't they? And it went from basically 75 to 125. In 3 years. Is that significant? Okay. So it's significant and unnatural. Japan manipulated their currency. Okay. On the flip side of this, you could also say the dollar gained strength because it's relative, right? Fine. So a little bit of both, let's say. But the dollar was weak through at least half this move. Okay, so even this first part of this move, the dollar was also weak because they were also doing quantitative easing. So this is very much a yen weakness story. All right, so That's Japan, and they're doing that because they want to export more products. It's pretty simple, right? Okay. Who's Japan's #1 competitor when it comes to exporting products? China. And what's happened to the Chinese over that same period? Okay, gain value. Why? Because they're pegged to the dollar, and the dollar went up. Now, what are the Chinese thinking about the Japanese right now? Oh, yeah, they're not loving it. They're mad. Yeah. All right. So, isn't it time for China to get in the game and devalue their currency too? Well, they feel left behind in all this. You know, there's a part of me, I'm not a conspiracy kind of theory guy, but I think it's all coordinated somehow, and that everybody gets a turn. If everyone devalued their currency at the same time, nothing would happen. There would be no net effect. United States first, Japan second, Eurozone third, China fourth. Why in that order? The size of the bond markets. So there might be some aspect going on there that makes sense, right? So while Europe has already started printing their money and pumping it into the economy, and once it starts trickling down to the average yuan, might be a good time to also make Chinese products or cheaper, let's say. And look how much room they have. Right? So we've had 3 days of devaluation of the Chinese currency, and this is what it looks like relative to what's happened. Puts it in perspective, don't you think? But the problem is, you know, I don't know. We'll see what happens. I mean, I don't know. It's got to play out. So I'm not freaking out about China. It seems to be a logical move to me. Yeah, Debisa says, why can't China choose to remove from the peg? I think that's what they're doing. See, what happens is if you peg, you basically give up monetary policy decisions. Now, the good thing is that reduces inflation. Okay? Because you can't just go out and print money. There's something like 60 countries globally that peg to the US dollar. And they do it because they probably tried allowing the government to run their currency, and what the government does is just spend it, print it, print it, inflation, 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 inflation. It's generally what happens, no matter who you are. Need to finance a war? Print money. It's been going on since the beginning of time. It was actually the reason the first central bank in the world was the Bank of Sweden. The royal family created it so that they can print money to fight wars. So anyways, it goes on forever. So to sort of solve that problem, isn't it easier just to peg to the US dollar? Besides, most foreign transactions are priced in dollars anyways. When Japan buys oil from Indonesia, they do it in US dollars. Lufle, tuliumum. So you might as well just stick to the stupid dollar and hedge the exchange rate risk, right? And it disallows your central bank from printing money. You just can't really. So you're pegged to something important. Solves a lot of problems. Well, but it also hampers you, right? So if you're China and you're like, man, Japan is manipulating their currency like crazy, and we're pegged to this dollar, and industrial production is way down. We're sucking wind here. We're dying here, waiting for Europe to get on board. That could be a long time. All right, so Ron asks a good question. Do you guys want to dive into fundamentals even more? I don't want to get heckled. People are going to yell at me. I'm going to feel bad. All right. All right. Is money really printed or is it a figure of speech? It's actually a figure of speech. So cutting interest rates, okay, that stimulates growth because if money is cheap and available, it has to be available. Think about it. When houses in the United States were dirt cheap, they were great deals. You could buy a house for half price, but people couldn't get credit. I bought like a $50,000 sports car in the worst part of the financial crisis because the dealer couldn't sell it. He was going out of business. He couldn't pay his rent. He couldn't pay his people. Couldn't even pay, you know, these, I don't know, whatever he was telling me, the fees. Like they were sucking wind. They said 3 people have tried to buy this car because I lowered the price so much. And each one of them tried to get financing. And they couldn't get it. Credit-worthy people couldn't get a loan from a bank. So I said, well, I'll give you $17,000. Cash. Yeah. Oh, yeah. I drove away with it. And that's how it works. Cash is king, baby. Oh, yeah. It had 11,000 miles on it. Yeah. Mercedes AMG 55, a 5.5 liter convertible Mercedes. Awesome. But that's how life works, right? So if money isn't available, even if it's cheap, it doesn't matter, does it? Yeah, John, same thing with John. John's saying the same thing. You buy houses with it, right? One of my buddies, he bought like 6 houses. cash. Boom, 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 because there was no credit. So, okay, let's assume there's cash or credit, right? So, lowering interest rates spurs investment. Very nice. But it doesn't create anything. It transfers wealth, basically, right? So the next thing is setting the reserve requirement ratio. And all that does is allow banks to lend more money. They lend out more money because there's less money held at the central bank. So they lend out more money, and that enters the economy, and that spurs growth. Cool. But we're talking about printing money now, right? Well, printing money isn't actually what's happening. Money gets printed when currency, because now we're talking about currency, not money. When currency, and there's very little currency relative, when currency wears out, you know, like you accidentally wash your wallet in the washing machine, and it gets all crumpled and all that kind of stuff. Or you draw funny faces on Benjamin Franklin's face. It gets detected by computers and scanners at the Fed, and they just destroy it. And they have the Treasury print money, deliver it to the Fed, and the Fed puts it back into circulation. But that doesn't do anything. That doesn't do anything. It's just replacing old currency. And like I said, there's only a little bit of currency and there's a lot of money. Okay? So, how is it created then, really? And so China's slashed interest rates, didn't do anything. They slashed the reserve requirement ratio like 10 times. And that is like crazy ridiculous to do. Okay? That hasn't happened in the United States since 1992, and they just changed it once, a little bit. So changing it 10 times in the course of 3 years is ridiculous. So anyway, so that didn't do anything. But so what happens, where money comes from, is from the banking system, and specifically in deposits. So, you know, if you put let's say you won $1 billion in the UK lottery, because, you know, I win the UK lottery like 3 times a week. I don't know about you. I just haven't had time to send my wire details to pick it up. But I win the UK lottery a lot. Has anyone else won it? Maybe it's just me. The UK lottery. I win it like 3 or 4 times a week. I get these emails that have won the UK lottery. And, you know, it's only like 2.5 million British pound. You know what I mean? I'm like, again? Awesome! All I have to do is send them my wire information. It's great. Anyway, so let's say you win the UK lottery and you're not located in the United States, right? So all of a sudden this money shows up. Money that's not in the hands of the population. Okay. So anyway, so this new money is added. You win $1 million, let's say. And you put it in the bank. 10% of that goes to the Fed. That's the reserve requirement ratio. For every $1 million in deposits, 10% has to be held at the Fed. That's required by law if it's in a checking account. So 100,000 goes to the Fed, and the bank is now allowed to loan out $900,000. So now the bank loans out $900,000. Somebody borrows that to buy a house, a $900,000 house. So the money is transferred from one bank to another bank. Whoever owned the house now has $900,000 in their bank. 10% of that is now deposited at the Fed, and $810,000 is now loaned out by the bank. That gets loaned out. That transfers to another bank. That bank puts 10% at the Fed. 90% of that's loaned out. And at the end of it, what happens is $10 million has been added to the money supply. Not one penny was printed. Not $1 bill was printed. Because that's cash. But cash is just one tiny, small form of money. And that's where it comes from. Yeah, I got it. I got you, bro. Got your back, dog. We'll do some retail sales here, and then we'll call it a day. What do you stink? By the way, Baltic Dry Index way down again. That's a serious bad trend. It was over 1,200. Now it's basically 1,000. Somebody is not shipping products around. It's amazing how sensitive it is. Only you beneath the moon and under the sun. So what are you going to do with it? Okay, well, a bear's going to sell this hard, man. That's what a bear would do. After a lower low in a trending market, what should you do? Ah, come on, Bubba. I'm just going to do it this way. Sell. Yeah, the cash is king story is interesting. When I bought this house that I'm in now, it was on the market. It was, and I had watched it for years, in fact. And I go to the bank one day and I make them an offer. And they're like, absolutely not. That is ridiculous, almost insulting. I'm like, whoa, dude, it's only money. Try not to get all pissy about it. It was just an offer. A year later, I go back to the bank. I offer them 20% less than the insulting offer. Sold. Thank you, you mofos. That's what you get. Cash is king, Bubba. I prepared everybody I knew. Every webinar I did, I prepared people for that process. We were so ready for all of that. I was begging people at that time. My message, and we still have 90 seconds. My message was that you can't save your way into prosperity. I got everyone ready to cash out at the top before the crash. We bought the Japanese yen and sold the dollar as fast as we could, and we made pips like you wouldn't believe. I got people back into the stock market, not on the initial bounce, but on the pullback to 8,000. And I was begging people to get back in. Begging. You can't save your way back into prosperity. And I said, what's the cliche? You hang on, watch the stock market drop 50%, then you get out and watch it go all the way back up. I'm like, don't be a cliche. Again, weeks and weeks and weeks and weeks of these discussions. It's awesome, man. It's only money, right? All right, so let's get the news going.
And the new housing price index for June expected 0.1%. The advanced retail sales weekly jobless claims import price index and the Canada housing data in just a few seconds.
Canadian housing data is going to be pathetic.
Sales 0.6% is in line with expectations. Ex autos at 0.4%, also in line with expectations, but back month five is up 0.5%, 0.4% on ex autos. Jobless claims 274,000 is 4,000 higher than expected. Back month five is down 1,000 is 269,000. Continuing claims 2.27 million above the 2.25 million expected. The back month five slightly higher. Import price index minus 0.9% is 0.3 higher than expected. Month over month, year over year at minus 10.4%. It's also 0.3 higher than expected. Canada new house price index at 0.3% is 0.2 higher than expected.
Advanced Auto Parts, AAP, 2.37 billion in sales, in line with estimates. Same-store sales rose by 1%. Comparable earnings, a 2-cent beat at $2.27 a share. Alpha Papa. The company maintaining their full-year cash outlook, $8.10 to $8.30 per share. Consensus $8.25.
Thank you, TradeTheNews.com. You know, pretty decent numbers here, but not game changers. So you could have sold that 21 EMA. Why do you sell the 21 EMA? Because it's there. Right on, Sebastian. High five. High five. Good job. In a downtrend, the 21 EMA is a dynamic level of resistance. It's a basic tenet of trading. All right, so that's that. Hope it sticks, man. Oh, Rick, you need a MACD? What time frame do you want to look at? I'm Rick P, and I get respect. Your cash and your pips are what I expect. Pick a time frame, any time frame, Ricky. All right, let's do an hour. All right, here's the MACD. I will draw it on top of the stochastics. Here, hang on. Let's keep that fib. Living la vida loca. All right, so I'll use one line. I'll make it blue. Okay. All right, so there's a crossover here. So I have to draw a midpoint line, don't I? We'll do that. Let's use, I'll use black. All right, so because it's MACD, we need a water line. So the water line is right here. Okay, boom. Step 2, 21 crosses below the 55. So it's going to be below the water line here. And it's going to be down, 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 down to about here. And then it's going to be, let's say, halfway back to the water line, about there. So on this side, it'll be, let's see, it's going to be kind of wobbly. Okay, there's the MACD. Okay, you see that? Squiggly sort of double bottom, kind of up here for a while, and then back down, and then just sort of bottom out right about there. Let's see. So insert, let's do it that way. Indicators, custom, where's the one I use? I think it's, I use 21, 55, 8. Boom! Shalakalaka. Nice! There's the MACD. So that's where it is. Green. It's in my gray matter. Okay, coming up to the midpoint cycle. Could be another interesting little scalp opportunity. See, the news wasn't that bad. In fact, a little bit better. They were expecting pathetic real estate numbers, and it wasn't pathetic. I mean, it wasn't anything to brag about, but it could have been a hell of a lot worse, I suppose. But if you want to buy a Canadian dollar, there it is, right? You could probably do it right about there. It happens to be a 50% and a midpoint cycle level. Okay. The next level, which is even a better level, truly is more like this up here, which is 618. So it's your call. It's whatever. Okay. But just make sure you're a bull on the dollar, on the Canadian dollar, I should say, if that's what you want to do. Advanced retail sales, perfectly as expected, just no news there. But the news is it's not bad, expected, which is sometimes, sometimes not bad is good news because it could have been bad. So that's good news for the US dollar. Jobless claims, not good, not bad. 274 versus 270 for the week, right? Week over week. But continuing claims, 2.27 versus 2.25. That's not good. But again, nothing really to be concerned about at this point, because it's the trend and the velocity of the trend that matters. So when the dollar's strong, I sell euro dollar, right? And when it's weak, I buy pound dollar. Just sort of basic standard operating procedure. Okay. Now, if you're a bear on the dollar and you do want this to go up, you know, this pivot zone, which is the red zone here, is actually a pretty good place to be ready. Okay, like this whole area, this, if any bull left in the market, it basically has to go up here. Right? If it's going to go up, it basically has to go up there. So if you're looking for that, I'd be ready. I'd get ready. We're getting close to the zone. Look for pivots, look for psych levels, and then on smaller time frames, look for reversal patterns. Right? So if it got down there, and we're not quite there yet, okay, but we just breached 111. So it'd be, my guess would be it's 110.80-ish, because there's nothing special, I'm just going off price, or 110.50. One of those is likely to be support, just based on the numbers. That's what I'm thinking. So then what you do is you back out and say, well, are those numbers near anything interesting? Oh, it's the weekly pivot. What used to be resistance is support. So my thought process is this, this, this. If you want to be a bull. What? Hoorah! Rather do that with, you know, something I'm bullish on, but how about Aussie, right? That brings us down to that interesting 382 zone. If you're a bear, I think we set that up as a bear, didn't we? On the Aussie USD. And so we could kind of look at it from, okay, it's still, we still have it as if you're a bull, but I think we also have it somewhere here as a bear, right? Yeah. So we're just actually making money on yesterday's trade. So maybe continue mission. Remember, we haven't even tested the key levels here. I would be sort of red alert, interested, you know, maybe taking profit or something around sort of the opposite of what I said on the other currency pair, 73.20. Okay, to 72.80. That would be just, again, based on nothing but price, the bounce zone. So then I look at here, here, and here, and there's perfect little overlaps. So if you were a bull on this, and I'm not saying you should, if you've made that decision yesterday or the day before, or last week, last month, you would look for something like that. Okay. Now, if you go into the smaller time frame, you'll see what actually happened. Okay. And what was the trade plan for the bears? I'm not saying it would have been easy, but sell the retracement, right? It was actually, no, I didn't mark that up appropriately. It was actually this one. Back to the midpoint, drop it like it's hot, right? So anyways, not easy trading, but plausible trading. Oh yeah, euro dollar is accelerating down. Awesome. USD yen is accelerating up. Actually, some pretty good stuff going on. So let's end on time for the first time in many weeks. I think I think yesterday I went 3 hours, and I've been averaging about 2 hours over the last couple of weeks for these webinars. Just too long. So I apologize for the long webinar. So let's keep it to now to hour and 15 minutes, only 75 minutes, right? So yeah, there was a recording problem yesterday, Alan, but therefore I just kept going. So it ended up being something like close to 3 hours. So anyways, peace on earth. May the pips be with you. May your profits be above average. My name is Wayne McDonell. I'm with TradersWay. If these sessions are helping you and you're developing skills and confidence in your skills, and you decide to start trading real money, maybe you'll make TradersWay your prime broker throughout the rest of your successful Forex trading career. This video will be posted on forex.today within the hour. So again, peace on earth. May the pips be with you. May your profits be above average. Yeah, sorry, Dabista. 9,000 things going on. So see you tomorrow, guys. Oh, and is it Thursday? So tomorrow I'll be at fxstreet.com. Cheers.